Housing Market Index. That's our topic for today's Backstage Pass. Hey friends, hope you're having a great day so far today. Stocks are down ever so slightly here at the end of the trading session today. Mortgage bonds are up. We'll talk more about that in just a second. But first, let's talk about the National Association of Home Builders Housing Market Index. This is a real-time index. It's on a scale of 0 to 100. Anything over 50 shows or indicates an expanding market. Anything below 50 indicates a contracting market. And this is a survey that goes out to association members, just asking them what their perception, what they're feeling of the market is. So the headline data, the Housing Market Index, well, that decreased for the month of November by 5 points from 38 to 30 points. Sales expectations, well, that decreased by about 4 points. That came all the way down to 31 points. Current sales decreased by 6 points, down to 39 points. And buyer traffic decreased by about 4 points, and that landed at 20 points. Now, we'll dive into this data a little bit more tomorrow and bring you some more information. We'll have a graphic for you on this data. Now, into the bond markets day. Mortgage bonds are up at the time of recording about 30 basis points. The 10-year yield is down about 12 basis points. The national average for a 30-year fixed rate mortgage ended the day yesterday at about 6.65%, but we do expect today for that to end a little bit lower by the end of the day. Now, the mortgage bonds, they've been on a roller coaster so far today. They opened up the day lower by 30 basis points. Now they're up 30 basis points, so that's a 60 basis point swing. It's a pretty big swing for intraday trading. What happened this morning is that we had a retail sales report for October that came out, and it came out stronger than what was expected. So retail sales on the headline for October was up 1.3%. That was more than what was expected by a good bit. And then the core retail sales, well, that was up 0.7%. That was more than twice of what was expected. So a strong retail sales report for October. And at first, the bond market didn't like it, but throughout the day and throughout the middle session, the bonds kind of shrugged it off and said, man, we're not that worried about it. And why? Because we've got current reports right now about retailers having some layoffs that are going on, big retailers, names that you would know. So there's some layoffs that are going on. We also got the CPI and PPI data that are showing, inflation is coming down. So the markets are looking at this October retail sales report and saying, you know what, this is old news. Right now, what we're looking at right now gives us a little bit of hope that inflation is coming down. And so bonds kind of retrace their steps back up to even. Then we got a 20-year Treasury auction. There was a high demand for the 20-year Treasury auction that happened today at 1 p.m. Eastern, and mortgage bonds have gone up since then and yields have gone down since then. So that's what's going on in the bond market. And again, tomorrow we'll bring you a little bit more detail about the NAHB report. But that's all the news that we have for today. So remember, stay positive, have a great day, and we'll see you tomorrow.